Fantastic. So we want to also now go into a very interesting session, and we have the pleasure and I have the honor of reading out this amazing title. All right, this is a global consulting actuary. This is Alta Actuaries and Consultants, and she is the executive director, Actuaries Without Borders. I love that. All right. And this is none other than Renata De Leers. So welcome, Renata, and take it over from here. We are honored to have you. And congratulations once again, Mercy. That time I have to call you and just congratulate you personally on behalf of the Actuarial Convention 2020. Over to you, Renata, and take it over from here. Thank you.
Now, to plan, grow, and protect what you value, visit uapoldmutual.com.
Ladies and gentlemen, welcome for another session. Yesterday we had a very interesting discussion and we were discussing the safari. Today we want to take a little bit back and look at the Africa as a continent. One of the things that we need to appreciate is that East Africa, through the safari, has already done a very tremendous job in coming up with a framework. Now, I'm humbled to have with me today Renata. Renata is an actuary who has been doing a lot of work with actuaries across the region, and predominantly, Renata has done a lot of work in West Africa. So I want to just take it back to Renata. She will be able to tell us more about herself. Then we are going to have a very good further discussion. So Renata, just introduce yourself. Then you can just go straight to what do you see in the African landscape, particularly with the insurance regulations, and how then do these particular professions such as actuaries do help us really meet the standards that have been set across the region. Renata.
Thank you, Elias, for this introduction. And thank you for giving me the opportunity to share my experience and expertise in Africa, non-English speaking Africa. I am a Belgian actuary who moved to Africa about 25 years ago, and that's my basis since then. I worked especially for regulatory bodies in French-speaking Africa, Arabic-speaking Africa, and some countries in English-speaking Africa. And so I will now share some insights of insurance regulations in non-English-speaking Africa. Which countries? The Maghreb countries, the Islamic Republic of Mauritania, the Sima region, the Democratic Republic of Congo, and Madagascar. What is CIMA? CIMA stands for the Conference Interafricaine des Marchés d'Assurance. It's a region of 14 countries. The region was created in 1992 through the signature of a treaty in Yaoundé, Cameroon. The treaty is an insurance regulatory framework which came into force on the 1st of January 1995. 12 of the 14 member countries are French-speaking: Benin, Burkina Faso, Cameroon, Congo, Côte d'Ivoire, Gabon, Mali, Niger, République Centrafricaine, Senegal, Chad, and Togo. One country is Portuguese-speaking, Guinea-Bissau, and one country is Spanish-speaking, Guinea Equatorial. 2 countries joined with an observer status since creation: the Democratic Republic of Congo and the Republic of Guinea. Based on ICP2, I classify now those countries in 3 groups. I recall first ICP2 for those who don't know the ICPs, Insurance Core Principles of IAIS, International Association of Insurance Supervisors. So let me read. The supervisor is operationally independent, accountable, and transparent in the exercise of responsibilities and powers. So let me use this principle to classify this group of non-English speaking countries. The first group contains Morocco, Tunisia, and Democratic Republic of Congo. They all have an independent insurance supervisor. To start with, Morocco. It established in 2016 ACAPS, Autorité de contrôle des assurances et de prévoyance sociale, or Supervisor for Insurance and Social Protection. Then we have Tunisia. In Tunisia, the CGA, Comité Général for Insurance, was created in 2008. Then in DRC, in 2016, ARCA was created by a decree. ARCA stands for Autorité de régulation et de contrôle des assurances. It is fully operational since 2018. Those three insurance supervisors are independent bodies. They are all members of IAIS. Then the second group. The second group contains the Islamic Republic of Mauritania and Madagascar. As from the 1st of January 2021, the Central Bank of Mauritania will become the insurance supervisor in Mauritania. In Madagascar, transition from a government institution to the Central Bank is under consideration. Madagascar is member of IAIS. Central Bank of Mauritania is not yet member of IAIS. For those two groups, a gradual compliance to all ICPs is taking place. It will take time, but they have strong aim, strong objectives to be in compliance with the ICPs. And then we have the third group. The third group includes Algeria and the CIMA. They do not yet comply with ICP2. And the fundamental standard 2.1 is not yet respected. Now let me explain you the labyrinth of the institutional organization of the CIMA region. First of all, the CIMA has a Council of Ministers of the 40 member states, and this is the highest decision-making body of the conference. Then you have the Committee of Experts, appointed by the Council of Ministers, to advise the Council on regulatory and supervisory matters. Further, you have the Regional Commission for Insurance Supervision, the Regional Supervisor for the 14 countries. It contains 11 members. First of all, 6 appointees by the ministers of 6 member states. They are usually the managing director of the National Insurance Department. Then you have the managing director of the regional reinsurer, SICARE, a representative of the Central Bank of West Africa or Central Africa, a representative of the French Corporation, a legal advisor, another expert nominated by the Council of Ministers, ex officio members such as the president of FANAF. The FANAF is the Federation of Insurers of National Law, the managing director of the International Insurance Institute of Yaoundé, and the Secretary General of the Secretariat. Then we have the Secretariat of the Conference, based in Libreville, Gabon. It is the permanent administrative organ of the regional supervisor, headed by the Secretary General, who is appointed for a period of 5 years. Then, in the 40 member states, of course, we have National Insurance Department, who act as the liaison between the country, the member state, and the regional supervisor. They act as an advisor to the minister in charge of the insurance market in the member state. A labyrinth, as you can see, very complicated if you're an outsider, but when you're working in that environment, it's okay after a few years. But as you can hear, this is a complex regulatory and supervisory network managed by governments of the member states. And therefore, standard 2.1 is not respected. Algeria is not a member of IAIS. With respect of the CIMA, the Secretary General of the CIMA is member of IAIS. What about the solvency regimes in those countries? Based on the previous classification and what I told you, it's probably easy to guess. In the first group, the insurance supervisor of Morocco prepared a draft regulation on risk-based solvency. This draft was shared with the stakeholders in 2017 as per Standard 2.9. The regulation includes a simplified model for risk-based capital, comparable with what you have in East Africa. It includes also a requirement to evaluate technical provisions as per best estimate evaluations. Until today, this regulation is not yet implemented. So meanwhile, still Solvency I and rules-based supervision. In Tunisia, the supervisor concentrates at this moment on the implementation of IFRS 17, and it has somewhere a draft regulation kept secret, not available for public consultation as per Standard 2.9. Meanwhile, Solvency I and rules-based supervision apply. Nevertheless, it should be mentioned that there are requirements to set up the 4 internal control functions, including the actual function and the risk management. Based on my experience in the Tunisian markets, it looks, however, as that those independent internal control functions are more considered as operational functions reporting to the CEO. In the Democratic Republic of Congo, which has a very young market, the insurance regulations comply with ICP 5, 7, and 8, which means a good governance framework for insurance companies, fit and proper requirements for the key staff, risk management system, and mandatory 4 internal control functions. Unfortunately, not yet a risk-based solvency supervision, not yet a risk-based capital. Between brackets, the minimum social capital for a Solvency I regime is in DRC $10 million US, quite a lot for a new market. But nevertheless, many new actors entered in the market since 2 years. In the second group, we have the Central Bank of Mauritania, the insurance supervisor from Mauritania, keen to comply with international standards, though the transition is difficult in a small insurance market. All the stakeholders need to get a lot of training. They need to develop actual skills and more. A process of strong sensibilization of the market is necessary to finally implement a more modern regulatory frame. But there is a willingness from the Central Bank of Mauritania. In the third group, we have Algeria and the CIMA, loyal to the Solvency I regime and to a strict rules-based supervision framework. At this moment, no move towards RBC. The minimum social capital has been recently increased in the CIMA region to 5 billion francs CFA, which is about 7.6 million euros, mandatory for each company based in one of the 14 member states. What are the implications for the actual profession in those countries? Sadly to say, very little notions about actuaries in those countries. In Tunisia and Algeria, an external actual audit of the technical provisions for life and non-life companies must be done by external actuaries. In Tunisia, the external actuary must also certify the actuarial memorandum of life products. The
Right.
requirements for those external actuaries are, first of all, being of Tunisian nationality, then having an academic degree of actual science or proven experience in actual matters.
Right, Renata,
The same with Algeria, yes?
maybe just to cut you short because we are having like 5 or so minutes. So maybe you talked about the implications that the discussions that we've been having in CIMA regions and some part of Northern Africa, particularly trying to address ICP2. Members, ICP2 are the insurance core principles. These are standards or principles that basically govern the insurance supervision across the world, and they are basically set by International Association of Insurance Supervisors. So when you hear about ICP and IIS, those are quite important standards for insurance supervision. Now, Renata, you did mention that there are a number of implications while you are developing and assisting these regions and these countries towards implementation of ICP2, and also predominantly you've talked about ICP 17. ICP 17 ideally members do stand for capital adequacy. It's basically a standard or a principle that governs capital adequacy. Now, I want to fall back and maybe as we close this particular session, what are the areas where actuaries should focus on, particularly looking at regions such as CIMA region, that's the West Africa region, that are highly predominantly French-speaking, North Africa region. How would you advise actuaries that are tuned in into this particular session? How do they penetrate those particular markets? And how can the profession assist these markets?
Well, as I told you, at this moment, there are only a few notions about actuaries in the regulatory frameworks of those countries. And therefore, you will find only a few actuaries working in those countries. And when they are called upon, actually they are called because they are considered being super calculators, calculating mathematical reserves for life insurers, or writing actual memorandums for life insurance products. So this is where they can fit in at this moment. There are other domains where they could contribute, for example, asset liability management, or they could assist regulators in implementing the basic standards such as ICP 8, the implementation of the 4 internal control function, or setting up an appropriate risk management framework. These are areas where actuaries could contribute. However, at this moment, given that we are in a Solvency I framework, those actuaries will need a lot of perseverance to convince regulators, to convince also the stakeholders, insurance companies. A long way to go, knowing that also in those countries there are only a few associations. There are only 2 full member associations in Morocco and Ivory Coast, and then we have 5 associate member associations namely in Tunisia, Senegal, Togo, Benin. I said 5, I think there are only 4. So, those associations, they should undertake lobbying with the regulator, with the Insurance Federation, FANAF, and the local insurance associations to make themselves, visible, to explain how they can help, what they can do more than just calculate reserves, than just writing technical notes.
Right. Thank you, Renata. And maybe just to now, I want to give you a chance to give us a parting shot. I know actuaries and even members of the Actuarial Society of Kenya, within Kenya and also across the world, have tuned in. How do you advise them? What are the next steps? Given that you've been doing a lot of work in Africa, what should they focus on in the future?
Are you asking this question for TASC, or are you asking this question for the associations in West Africa and North Africa?
West Africa, North Africa, and even the reason why I'm also including TASC is because I believe that members of TASC can even provide a lot of value in West Africa. So just an overview of how then TASC can also be of great importance to West Africa. Which areas should we focus on if we want to penetrate that particular market?
Well, Elias, then I have one strong recommendation for your members. Learn French. You may find this funny, but you must learn French because, they only speak French at this moment. And so if you want to make a difference in those countries, then you have to approach them in their language and go softly, softly. Otherwise, it might be a cultural shock.
Thank you. Thank you very much, Renata. It's always a pleasure having you. And one big thing that members have learned is that we have to learn French. The only thing that I understand, the only one word that I understand in French is bonjour. But I think maybe my next big subject, my next class will be a French class, French lessons and all that. So thank you very much, Renata. We really appreciate the time that you've taken. Members, Renata has taken us through a very exciting discussion on what's happening in CIMA region, what's happening in DRC, what's happening in North Africa. And I believe there are great opportunities for all of us to see how then we can really help the other regions within this particular great continent of Africa. As we have always say, thank you very much. There are so many sessions that we'll be having, and enjoy having us in this particular discussion. TASC Convention 2020. Thank you very much. And thank you, Renata. It's always a pleasure having you.
Merci et à bientôt.
Thank you.